What if a private company became so powerful it owned armies, navies, waged wars, enslaved populations, committed genocide, controlled half of global trade, and at its peak was worth more than Apple, Microsoft, Amazon, Google, and Saudi Aramco combined, multiplied by 3? 1602 Amsterdam. The Dutch government grants the Verenigd Oost-Indische Compagnie, the Dutch East India Company, known as VOC, a 21-year monopoly on all trade between Europe and Asia. This wasn't just exclusive trading rights. It was the legal authority to negotiate treaties, build forts, maintain armies, coin money, and wage war on behalf of the Dutch Republic. The VOC was a corporation with the powers of a sovereign nation, and it used those powers to become the wealthiest company in human history. At its peak in 1637, the VOC's market capitalization was approximately $7.9 trillion in modern value. That's trillion with a T, making it worth more than the top 5 companies today combined. For 200 years, from 1602 to 1800, the VOC controlled the spice trade, monopolized nutmeg and cloves, enslaved populations across Indonesia, committed genocide in the Banda Islands to maintain nutmeg monopoly, and pioneered every corporate extraction mechanism still used today. Monopoly pricing, planned scarcity, stock manipulation, dividend payments prioritized over sustainability, and private military force protecting profit margins. This is the story of how the VOC invented modern corporate capitalism by combining state-granted monopoly with military force and unlimited extraction. Why $7.9 trillion in value came from enslaving populations and controlling resources through violence. How every mechanism the VOC pioneered, from stock markets to shareholder capitalism to corporate militaries, operates today. And why understanding the VOC reveals that corporate capitalism was designed from the beginning as wealth extraction through violence, not value creation through innovation. The pattern is clear. The first modern corporation became the wealthiest in history through monopoly and mass murder, and every corporation since has followed the model. Let's start with how the VOC actually worked and why it was fundamentally different from anything before it. Prior to 1602, European trade with Asia was conducted by individual merchant voyages. A merchant or group of merchants would finance a ship, sail to Asia, buy spices, sail back, sell them, and split profits. High risk, high reward, but limited scale. The VOC changed everything by introducing the joint stock company model. Instead of financing individual voyages, investors bought shares in the company itself, which owned multiple ships and conducted continuous operations. This meant permanent capital, continuous trade, and risk spread across many voyages instead of concentrated in one. The VOC raised 6.5 million guilders in its initial stock offering in 1602, roughly $110 million in modern value, making it the first major publicly traded company. But here's what made it unprecedented. The Dutch government didn't just charter the company, they gave it sovereign powers. The VOC could negotiate treaties with Asian rulers as if it were the Netherlands itself. It could build military forts and maintain garrisons. It could wage war and sign peace agreements. It could establish colonial administrations and impose laws. It could coin its own money. It had its own flag and naval fleet. This was a corporation with an army, and it used that army to create and enforce monopolies that generated unprecedented profits for 2 centuries. The operational scale reveals just how massive this corporate empire became. At its peak in the late 1600s, the VOC employed approximately 70,000 people globally: sailors, soldiers, merchants, administrators, and enslaved laborers. The company operated over 150 merchant ships and 40 warships simultaneously. It established trading posts and fortified settlements across Asia, in modern-day Indonesia, India, Sri Lanka, Taiwan, Japan, Thailand, and South Africa. The VOC controlled Batavia, modern Jakarta, as its Asian headquarters, transforming it from small Javanese port into major colonial city. The company maintained permanent garrisons totaling approximately 10,000 soldiers at various forts across Asia. This wasn't a trading company with a few ships. It was a multinational empire operating on scale comparable to small European nations, except it was entirely private and entirely focused on profit extraction. The spice monopoly reveals how the VOC operated and why violence was central to the business model. Nutmeg, mace, and cloves grew almost exclusively in the Banda Islands and Maluku Islands in modern-day Indonesia. These spices were worth more than gold in European markets. A pound of nutmeg in Amsterdam sold for 68,000 times its purchase price in the Banda Islands. The profit margin was so extreme that a single successful voyage could return 400% profit. But this only worked if supply was controlled. If anyone could sail to the Banda Islands and buy nutmeg, prices would crash. So the VOC needed monopoly, and they achieved it through genocide. In 1621, VOC Governor-General Jan Pietersoen Coen led a military expedition to the Banda Islands. The population was approximately 15,000 people. The VOC demanded exclusive trading rights. The Bandanese refused. Coen's response was systematic extermination. VOC soldiers killed approximately 14,000 Bandanese, over 90% of the population. They enslaved the survivors and imported slave labor from Java to work the nutmeg plantations under VOC control. The VOC then cut down nutmeg trees on all islands except those they directly controlled, ensuring no one could break their monopoly. This wasn't war over territory or ideology. It was corporate profit maximization through mass murder. The genocide worked perfectly from a business perspective. The VOC monopolized nutmeg, controlled supply, set prices at whatever the market would bear, and shareholders received 30% annual dividends for decades. 14,000 people died so Dutch investors could get rich selling spices. Here's how the VOC became worth $7.9 trillion at peak, and why that valuation reveals something important about corporate capitalism. The peak came during Tulip Mania in 1637, when speculation drove VOC share prices to insane levels. But even outside the speculative bubble, the VOC maintained valuations that dwarf modern corporations because it had something no modern company has: legal monopoly enforced by private military. Apple is worth roughly $3 trillion because it makes products people choose to buy in competitive markets. The VOC was worth $7.9 trillion because it was the only legal source of nutmeg, cloves, pepper, cinnamon, and multiple other spices for the entire European market, and it used military force to eliminate all competition. If Apple had a legal monopoly on all smartphones, owned a private army that killed anyone who tried to make competing phones, and could set iPhone prices at 10 times current rates because nobody had alternatives, Apple would be worth far more than $3 trillion. That's what the VOC was: government-granted monopoly plus military enforcement plus complete price-setting power. The $7.9 trillion valuation wasn't because the VOC was incredibly innovative or efficient. It was because monopoly plus violence generates unlimited profit until the resources run out or the violence becomes unsustainable. The corporate mechanisms the VOC invented are still running the world today, which is why understanding VOC history matters. The VOC created the first modern stock market. Shares traded continuously on the Amsterdam Stock Exchange starting 1602, establishing stock trading, price speculation, and shareholder capitalism as we know it. The VOC pioneered the concept of limited liability. Investors could only lose their investment, not be held personally liable for company actions, which meant investors profited from genocide in the Banda Islands, but faced zero legal consequences. The VOC established the dividend model. Regular payments to shareholders took priority over sustainability, long-term planning, or ethical considerations, which meant cutting down nutmeg trees in some islands and exterminating populations made perfect sense because short-term dividends mattered more than long-term resource management. The VOC used stock manipulation. Directors had inside information about voyage success or failure and traded shares before news went public, making fortunes through what we now call insider trading. The VOC maintained private military force funded by corporate profits. At peak, the VOC had 40 warships and 10,000 soldiers, making it a military power rivaling European nations, all funded by trade profits and used to protect profit margins. Every single one of these mechanisms operates today. stock markets, limited liability corporations, dividend prioritization, insider trading, private military contractors, all pioneered by the VOC between 1602 and 1800. The modern parallels make this history uncomfortably relevant. The VOC was worth $7.9 trillion at peak through monopoly enforced by violence. Amazon is worth roughly $1.7 trillion through market dominance enforced by anti-competitive practices, not violence, but economic warfare that destroys competitors. The VOC had exclusive government-granted monopoly on Asian trade. Google and Facebook have effective monopolies on search and social media through network effects and buying competitors before they threaten dominance. The VOC maintained private armies. Modern corporations like ExxonMobil, Shell, and mining companies hire private military contractors. Blackwater, now Academy, provided armed security for corporate operations in Iraq and Afghanistan. The VOC prioritized shareholder dividends over everything else. Modern corporations like Boeing prioritized stock buybacks over safety, leading directly to 737 MAX crashes that killed 346 people, because returning money to shareholders mattered more than fixing known safety problems. The VOC committed genocide to maintain nutmeg monopoly. Modern pharmaceutical companies charge $800 for insulin that costs $6 to produce, and people die rationing insulin because corporate profit margins matter more than human life. The scale is different, the methods are different, but the underlying logic is identical. Corporations exist to extract maximum profit for shareholders, and anything, human life, sustainability, ethics, law, that interferes with profit maximization should be eliminated or ignored. Here's the empire pattern that connects VOC to modern corporate capitalism. State-granted monopoly plus violence equals unlimited wealth extraction until collapse. The VOC didn't innovate, they monopolized. They didn't create value, they extracted it through violence. For 200 years, this worked incredibly well for shareholders. Dividends averaged 18% annually for 2 centuries. Early investors became extraordinarily wealthy. But the business model was unsustainable because extraction always exceeds sustainability eventually. By 1700, the VOC had overharvested spices, exterminated or enslaved the populations that knew how to cultivate them properly, destroyed the resource base through poor management, and faced competition from the British East India Company doing the same things in India. By 1750, corruption was endemic. VOC employees were enriching themselves through private trade that violated company monopoly, and the company couldn't stop it. By 1780, the VOC was bankrupt. The accumulated debts from wars, administrative costs, and corruption exceeded assets and revenue. By 1800, it was dissolved by the Dutch government, which assumed the debts and took over the territories. 200 years of operation ended with complete failure because extraction economics always end the same way. You extract everything extractable, you destroy the basis for future extraction, you collapse. The VOC extracted $7.9 trillion in peak value from Indonesian archipelagos and left them devastated. Populations reduced by 90% in some areas, ecosystems destroyed, resources depleted, and centuries of poverty and underdevelopment that persist today. The company that pioneered modern capitalism died bankrupt because the extraction model it perfected contains the seeds of its own destruction. This is the empire economy, where we decode the systems operating in plain sight but rarely explained honestly. The Dutch East India Company wasn't just the first trillion-dollar corporation. It was the blueprint for how corporate capitalism works. Get government-granted monopoly or establish market dominance. Use violence or economic warfare to eliminate competition. Extract maximum profit with zero concern for sustainability or human cost. Prioritize shareholder returns over everything. And operate until the resources run out or the violence becomes impossible. The VOC killed 14,000 people to monopolize nutmeg. Modern corporations don't commit genocide directly, but the logic is identical. Profit maximization justifies any cost as long as shareholders benefit. When you understand that modern stock markets, limited liability, shareholder capitalism, dividend prioritization, and corporate militaries were all pioneered by a company that committed genocide for spice profits. You understand that corporate capitalism wasn't designed to serve humanity. It was designed to extract wealth from humanity. The VOC proved that model generates trillions of dollars in shareholder value. 7.9 trillion at peak. Every corporation since has followed the same playbook because it works for shareholders even when it kills everyone else. The first modern corporation became the wealthiest in history through monopoly and mass murder, and we call what followed innovation.